Hello guys, good morning. Today is Saturday, and in this video I will answer a question that I have from the beginning of my channel, like last year to today, which is like around 1.5 years. Some people, they ask the same question. They imagine something and in their mind they make it as exist. Okay? And this thing doesn't exist in real. Now, maybe you have an idea what I am talking about. This thing is there a strategy that it is 100% sure to make the money? Now, I don't know from where someone or some viewers or some subscribers or some traders or investors get this idea that there is something that you can just apply and you make the money whatever is the market. Okay? So in the market there is no something for sure. Okay? Even if you get a signal, even you know a lot about stock, even whatever you think, that's why no one can predict 100% for everything he does. Okay? Even big traders, big investors, they are not sure 100%, but they act as what they believe in. If they succeed, they talk too much, as if they know, they have tuition, they think, it's like gambling. When you see someone, he hit the lottery, for example, 400 or 500 million dollars, okay? And when he hit that, and he got the money, you ask him, how do you feel, or how do you... Oh, it's because of me. I have an intelligence. I have strategy. I do this. I do that. And I was sure that he get the money. Now, he says this because he get the lottery. Okay. Now we ask him before he got the lottery. How can you be sure? Since you spent 10 years, 20 years, or 30 years, or 40 years of your life gambling, and you didn't get the money. How can this time you be sure and you... Can you do it again? And you hit another 400 million, 500 million. He can't. Because this is just luck. Like some people who bought some stocks, they were lucky. That's it. Other people, there are millions of people, millions and millions of people, from the past to now, they bought stock and they lost a lot of money. But there are just few people who make it. Why is this? Because you can't forecast for sure. You can forecast for things. You predict for things. You use probabilities. This is what all the people are using. But to say that it is 100% sure, this is the problem. Okay? So the idea of there is someone who knows that something will happen 100% sure, this idea does not exist in real trading, but exists in the hallucination of some people in their mind. Okay? They see a stock that goes from $1, now it is $40, and they begin to calculate his wealth because of that. But this is over. It is something that will never happen again to that stock. Because it happens. It's over. And you find another stock, maybe from $1 it goes to 2 or 3, but it never goes to $40. Okay? So, in this video, in short, what I am explaining that there is nothing real, there is nothing that it is 100% sure. Either if you are trading, you are scalping, you are doing swing trading, you are doing whatever you are doing, options, commodities, forex, whatever, binary options, whatever you are doing, there is nothing that it is 100% sure. And who can give that? Now, for example, mutual funds. You buy mutual funds, you buy like this, and he gets his percentage, like 1%, 2% from the fund. But did he give you a guarantee that this mutual fund will go up? No. Okay? Did he give you a guarantee that this mutual fund will not go down and you lose money? No. So how can you give someone money and he takes from the money 1%, 2%, 3% depending on the fund, and you are okay with that? Most Americans are okay with that. That's why a lot of people, if they are lucky, they can make the money. But if they are not lucky, they will lose a lot of money. Some they lose all what they have. Let's say, I will give you an example. See, for example, what happened in 2008, which is a big sell-off of the market. If you have stocks for 10 years, 20 years, what will happen to your investment about 10 or 20 years? You can lose 50% or 70% or whatever from the stocks that you hold. And you begin from the beginning, as if you are beginning 20 or 30 years ago. Now, there is no guarantee in the market. If you want to do a business that you can control more, you shouldn't do trading or investing. You should do other things that you know better. For example, if you are a car dealer and you are good at it, that's it. It means you can make the money and you are sure to make the money because you know the market and you control the market. For example, you buy a car here. The car here, for example, is a used car. It's sold with $10,000. And you know the market. If you find it somewhere else, 7,000, 6,000, you go there and you buy it from an auction or something and you sell it here. Even if you don't get 10,000, you get 9,500. You make a very, very big sale and you make too much money. This is because of your knowledge. You know the market a lot. Okay? But sometimes things happen. You buy a car with 5,000 and then you just brought it and then it broke or the engine is damaged or something and you lose a lot of money from this car, from this transaction. Okay, in order to make another engine or something, or you get some profit, but it's not that much. Okay? Things can happen in the business. But in trading and investing, things can happen. And imagine, think, a sell-off, for example, like in 2008, or like what happened in 1929. It is something unbelievable. People, they sell all what they have because they want to change. They go to another investment or they quit. Like they quit this the stock market. They go to buy hotels. They go to buy factories, or they buy to buy houses, or they do another business, or they go to retail, or they do another business. So they take their money, all their money from the market, and there are a lot of people, they have too much money in the market. So when they move their money, it will have a bad effect on those who invest for the long run. And you can do nothing. The only thing you can do, either you be patient until you lose 10%, 20, 30, 50, 60, 70%, or you take a small loss. But most of the investors, they don't get out quick. That's why when they get hit, like 2008 or 1929, they lose their share. They lose all what they have. Okay? I'm not speaking about someone who has $10,000, $5,000. Some people have millions of dollars in the market. They're buying stocks from 10 years, 20 years, and it is like it is his retirement. But they don't know that the market can go so bad against them, and they can lose too much money. So if you are in this business, you want to do this business as a day trading, swing trading, position trading, or investing, you should know that there is a big risk, that there is nothing which is guaranteed. That's why a lot of people, like brokers, like mutual funds managers, like hedge funds, why they do what they do? Because they don't want to risk. They want only to risk your money, but they will never risk their money. For example, I tell you about, I have just made a video yesterday. Someone who is a hedge fund manager, he got $3,500,000,000. Okay, 3 billion. It is not. It is not 300,000 or 300 million. Okay, it is $3,500,000,000. How do they get this money from the market? Because when you buy his, when you put your money in his fund, he will take 1 or 2 or 3% from administrative, they say, and then they take 20%, 40%, 45% of your profit. And some people, they accept. They accept. Why? Because they want a very high reward for their money. That's why they go to hedge fund. They don't go to mutual fund. Because a hedge fund is free to do in the market what they want to do. If, for example, you have a stock that you invest for 2 years or 3 years, it goes from $10 to $20. You are very happy that you have $10,000, it becomes $20,000, or $50,000, it becomes $100. You are very happy with investing. But one day, your stock was $20, and this hedge fund, they comes to your stock that you own for many years, and they sell short this stock. Now the company has nothing to do. The company is always good, and you check the balance sheet, earnings, management, and so on. Okay, you check everything. It's all okay. There is no problem with that. But you see your stock from 20, it goes to $10 in 1 day or 2 or 3. And you ask yourself, and you are searching online, what is the cause? What is the reason? And they tell you any stupid reason. I give you a stupid reason. That the general manager or the CEO of this company have an important meeting in the morning about a very large transaction, but he overslept. Instead of waking up at 7 in order to reach his office at 8, he wakes up at 12 o'clock, at noon. Okay? They give you a reason. You want a reason, they give you a reason. That's why I told you always, when you are doing trading, doing investing, don't look for the reason because it is useless. If your money is gone, whatever reason they put online, you accept it. But do you think that this is the reason? No. In the market, we have 3 things. Okay? 3 things in the market. This is the reason. 3 simple reasons. Someone is buying, a very big guy, mutual fund or hedge fund or anyone guy. He is buying too much. You'll find the stock having a trend, is going up. Now, if the stock is going down, we have 2 actions, 2 reasons. The first reason is someone is selling. Why you ask the guy why he is selling? He is selling because he's selling. Why you make it a problem for yourself to try to find something that you can't find? Whatever the reason they give you, it's not true. Because what is the true thing? Someone is selling. Okay? Someone like a mutual fund. You know, a mutual fund, in each year, he holds the stock for 1 year, and then if he finds that the stock is not doing well, he sell it. Okay? He just decides to sell it. It's not good for him. So, in the morning, they can give you any reason. But the true reason is a very simple reason. There are only 3 reasons. I told you about the first. It means someone is buying. Why he is buying? No one cares. Who cares why he is buying? He buys because he likes the CEO of the company, or because he likes the earnings, or because the company is very famous in America or in China or something, mostly in China or something, and it has a lot of earnings, a lot of money. It means whatever reason. Why you are asking always about the reason? The reason is useless. If the stock is going up, buy. That's it. When it's going up and up, you make the money. Why you are looking for a reason and you stay 1 week, 2 weeks, 3 weeks until he buys everything, until you see the trend, and then at the end, and then there's in the news, they say, oh, this company was so good, the earnings, you see the trend, You see, buy right now. Now when you buy, they short it. And you lose your money. Okay? Now this is the second reason I say someone is selling off. He doesn't want the stock anymore. Anyone. Now the third reason is when someone is selling off, the other guy is shorting the stock. Okay? When someone big like a hedge fund, he has billions of dollars in his hands. He go to a stock that it is small, $20 or $30, and he hits it. You don't ask this guy why. Because for him, when you ask him why, he wants to tell you, I want to make money. It's not because the company has a, has a problem. Some people, they don't look at your company under the name. For me, when I trade, it's rare that I see what's this company. Okay? I don't see the company name. Sometimes when I bought a company that was called WWE, I thought it's called, I think it's a company that's speaking about World War II or something. This is what I'm thinking about. Just say, see, WWE, what's this WWE? And then I find it is the World Wrestling here in America, which is a very good company. It goes from 50, it goes to 30, and then it goes down because they short it. Okay? So if something is going up, buy. If something is going short, short it. If something is going down, short it. You lose nothing. If it goes going down, you make the money. If it goes up again, it hits the stop loss. Okay, get out from it. There is nothing which is sure in the market. Nothing is sure. So why you think in your mind that there is something sure? Someone wrote to me and he said, and he and she or she says, I have read a lot of books of good traders. But when you come and you do their strategies, you fail. Because in each big trader, his strategy works in some years. For example, if the whole market is going up, any stupid person can buy any stock and it goes up and he can make money. Any stupid, even if he have no intelligence, he doesn't know, or she doesn't know nothing about investing, nothing about trading. It's just because all the market is going up. What does it mean going up? It means there are a lot of mutual funds, they're buying the whole market, they are all buying. No one is selling because they have too much money. Okay? And they are buying. But each year you find some stock that get hit so hard. Even if the stock market is going up. You say why? Because some people they sell. They say, okay, the stock was 50, now it's 100. I got 100% of my money. So why should I stay? Okay, they dump the stock. The stock go down. And the people who stay more, they will lose some money. Either from the profit or from the money. Okay? So I repeat again, in short, what is this video about? This video about is to tell you that there is no strategy that it is 100% sure. Now, if you can argue, or you can give me some examples, or you can give you another idea that you have in your mind, okay, just comment, like the video, or send me a private message and we can discuss that. Okay? So thank you very much and have a nice day.